I get asked all the time, what do you believe is the best stock to be buying in today's market, the best quality stock, the best stock in general on valuations, quality, all kind of metrics? What do you believe is the best investment? And it's really hard for me to choose the one best stock or the one best investment because especially in this market, there's so many opportunities, largely thanks to the semiconductor rally, which is giving us a lot of amazing opportunity on some boring or you could say old technology stocks like Microsoft and many others. But in this video, I'm going to tell you what I believe is likely the best investment in today's video. So I really hope you enjoy it as always. And this stock is Microsoft. Microsoft is down 21% over the last year. If you look at the setup on Microsoft, it's very compelling. The stock is trading at 20 times forward earnings. 20 times, guys. The average for the stock was 29 times. It traded as high as 35 times earnings. Now you're buying it at a record low PE ratio of about 20 times earnings, while the company is re-accelerating in earnings growth of about 16 to 17%. So this is the best setup when you're getting pretty nice earnings growth with a discounted multiple on a historical basis, because you don't only get the upside from earnings growth, but you also get the upside from a potential multiple expansion, and this combination can be very, very powerful. Now, this is largely due to the massive divergence between the hyperscalers like Microsoft and Amazon and all these companies versus what they would call the check receivers, which is mainly the semiconductors like AVGO and Micron and SK Hynix and all the memory stocks. They're doing really well, and the market is selling a lot of those hyperscalers. And it's not just Microsoft, it's also Amazon, Meta, and many others. Now, I want to share this very simple comment that someone posted under my latest video. And it's such a brilliant comment and it's such a simple concept that I never thought about before. And this person said, when I look at the price action of the Mag 7 stocks compared to the semiconductors, I start to think that the market forgot who pays the semi companies and who's paying them. It's companies like Microsoft and Amazon and Meta. And if Microsoft and Amazon and Meta ever decide to pause or even cut on capex, what's going to happen then? Those check receivers are no longer going to be receiving those checks, and those stocks that are being sold off are going to rally like never before. So they are in control of those expenses. They can cut back those expenses anytime, yet the market is selling them like they have to invest hundreds of billions of dollars in AI or something crazy is going to happen. They can decide to not just cut it, but potentially pause it. And I'm going to talk about this in today's video. But again, if you look at the company's business, like Microsoft 365 and a lot of the software products, those don't require 100 billion plus in capex. The Xbox and personal computing does not require $100 billion plus of capex. What requires the most amount of capex is the intelligent cloud or Microsoft Azure. And if we look at the intelligent cloud business, it's growing like crazy. Massive reacceleration from 22%, 27, 30, even now 31%. So the company is investing in capex for the business. They're selling the compute like never before. They're growing in revenues. They're making a lot of money. And the market is punishing them for investing for growth. I mean, think about it. If as a shareholder, would you rather the company pay you a dividend, like give it all to you at the dividend you're going to have to pay on it in taxes and pay all these things? Or would you prefer the company to reinvest in itself, widen the moat, take market share from Amazon and other players, and then fuel the growth of earnings per share, which most companies over the long term, they follow earnings per share or free cash flow per share growth, and over the long term, they're going to create massive value for you as a shareholder. Which one would you prefer? I would prefer the company to be reinvesting in itself. Okay, now this is something that has changed recently with all this capex spending, and mainly with Microsoft and also Amazon, is they want to start to pass the cost of memory down to the consumer. So the reason why capex is so expensive right now is mainly because of memory. Memory prices have been increasing a lot, and Microsoft said, unfortunately, console storage and memory prices have increased by more than 2.5 times. We expect another doubling in 2027. So the company is raising prices on the Xbox and they want to pass it down to the consumer. Amazon AWS is now doing the same thing. They're going to be raising prices by, I believe, 20%. and they're gonna start to pass it down to the consumer. So those companies are no longer gonna just eat up the memory, increases memory capex. They're gonna start to pass it down to the consumers, which I believe is a game changer. But the other thing about capex in general is if you look at those hyperscalers free cash flow, like again Microsoft, Amazon, Google, Oracle, and Meta, most of their free cash flow is pretty much nearing zero. So those companies are investing almost 100% of their cash from operations on capex. Their free cash flow is nearing zero. They leveraged up the balance sheet to bet more on capex, and they even issued stock in the case of Google and even Amazon, I believe it was, for them, and Meta for them to fund those capex obligations. So I think we're potentially nearing the end. With all this free cash flow near zero, they leveraged the balance sheet, they diluted the stock, and now the stock is coming under pressure. And once those stocks come under pressure, kind of like the metaverse with Meta in 2022, 2023, those executives will start to react. And I think they're running out of options for them to invest in more and more and more overpriced capex. So I personally believe, and this is what the market is pricing in, a trough in free cash flow for all the Magnificent Seven companies in 2027, next year. So next year is expected to be peak capex, and after that, free cash flow is expected to skyrocket for Microsoft and hyperscalers like never before. And if you look again at Microsoft's cash from operations, it has been growing like crazy, guys, from 87 billion, 118, 136, 170 billion dollars. But most of it has been spent on capex, which is why free cash flow is barely if 10 or 20 or 30 billion dollars. Now imagine if Microsoft doesn't cut capex. They just maintain capex at $97 billion and they continue growing cash from operations at the same pace they were growing it at over the last 3 to 4 years. The free cash flow of the company will explode like crazy while the company is spending $97 billion on capex. So they don't even have to cut capex. If they just maintain the current capex obligations, I think the stock will recover like never before. And by the way, I'm using Fiscal.ai to come up with all those charts. If you want to try it out, they give you 2 weeks of free access if you use my link down in the description. But the other bearish point with Microsoft is that AI is going to disrupt Microsoft. And you have a popular investor like Bill Ackman. He's saying otherwise. He's buying Microsoft stock and he's saying Microsoft is impossible to disrupt because they have 450 million users at a very low cost per seat of about $200. So if you want to come up with some kind of AI to recreate a Microsoft product, you're likely going to spend on token and maintenance and all these things much more than $200 for whatever is costing Microsoft, and they charge you maybe, I don't know, $300 or $400 for it. It's going to cost you much more than $200. So how are you going to go and compete with Microsoft or do it more efficiently than Microsoft can do it? It's very hard to do it because Microsoft has the economies of scale. They have so many different products, they cross-sell them, and it's extremely hard to break this bundled service that Microsoft has. But even if you can recreate what Microsoft has, can you also do it securely? Because Microsoft has a massive cybersecurity business that not a lot of people know about, not a lot of people talk about, and it's, again, one of the largest cybersecurity companies that no one even knows it exists, and they do it securely. So can you do all of this while maintaining the security that your enterprise actually needs? This is very difficult. So Microsoft is much harder to disrupt by AI than a lot of people believe. Now, if we look at the valuation of Microsoft, it's trading at about 20 times earnings, guys. 20 times earnings, again, is ridiculous. It's even lower than when they launched OpenAI, which was like 24, 23 times earnings. Now trading at 20 times earnings. This is absolutely ridiculous. Now, to put it into context for Microsoft, we're going to take a look at the analyst estimates, which is an average earnings per share growth of 15 to 16%, sometimes 20%. And now we're in fiscal year 2027 for Microsoft. So if over the next 2 fiscal years, or let's say over the next 3 years in total, if Microsoft grows on average about 17% in earnings per share growth, and the stock remains flat, Microsoft stock would be trading at 13 times earnings. Now ask yourself, how likely is it for Microsoft to trade at 13 times earnings with such a product, such an amazing CEO, with such margins, with the OpenAI stake, which OpenAI has been improving lately. I don't see how Microsoft's going to trade at 13 times earnings. So therefore, I don't see how Microsoft's going to be flat for the next 2 to 3 years while growing earnings 15 and 16 and 17%. And if they do it for 5 years, it will be trading at a 9p ratio. I hope I will live to see it, but I don't think I'm going to see Microsoft at a 9p ratio. So I believe, again, Microsoft is one of the best opportunities in the market. They are investing in CapEx, and their backlog, which is their RPO, is growing like crazy. It's like 633 billion, and 65% of it isn't tied to OpenAI. So they're diversifying from OpenAI. Azure is growing, everything is getting better, but the stock is going down, while the market is forgetting that the companies that are writing the checks to a lot of those semiconductor stocks are the hyperscalers, and most of this capex is growth capex, it's not maintenance capex, and they can pause it or they can cut it back anytime. So they decide how much the semiconductor stocks get paid. Yet the market is rewarding semiconductors and it's punishing those hyperscalers. And with capex expected to peak in 2027, I believe the market will front run it, and I believe we are nearing the end of the massive drawdown in Microsoft and a lot of those magnificent 7 stocks. So I hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.